Welcome to this special edition on WebTV, and we have in focus the FX market. A lot of people understand the financial market and also the capital market. The FX is one aspect of the overall economy and the financial market, and it needs to be clearly understood. I have with me today to discuss the FX market in view, one that we'll call an emerging expert in the area, Mr. Kelvin Eammanuel of Stpcholm. It's great to have you.
Thank you very much. Thank you for having me today.
You know, I hear the Forex, the FX, I've just been like, well, what is it all about and all that. And so today having you, I first want to ask, what's the global overview of the FX market activity as at the moment? Well,
to be honest with you, thank you so much for having me. It's a privilege to be here again. I will tell you that the global foreign exchange markets has been very volatile. The volatility index has increased greatly, and this is a period for swing trading, right? Now you have the dollar index having appreciated to around 85. You have crude oil trading down below $70. You also have the U.S. stock markets at a very, very high level, above 17,000 points for the first time. The Dow Jones Industrial Average for the first time in a very long time. For the first time ever, the U.S. stock market is at that high. And usually, when you look at the global dynamics of the foreign exchange markets, you see commodities like crude oil and gold are always anti the U.S. dollar and the U.S. stock market. So usually the trend is when you see the U.S. stock markets and the dollar index doing very well, it's a negative picture for the commodities and the oil and the gold markets. So what you see today, where a situation where after the Swiss National Bank referendum, several days ago, gold dipped and dipped to about $1,144 per barrel on the COMEX, and you saw a swing back. And what you see with crude oil is just a typical picture of what happens with the balance of the commodities market and the markets in the U.S. with the stock exchange and the dollar index.
That is very interesting, because some people were even saying, are you sure that American influence is not in the whole global dynamics?
Well, you have to understand something. You have to understand that when President Obama came into office in January 2009, at a speech in Cairo, at Cairo University, he promised that the U.S. was going to review its energy policy and change the focus of from consumption to production. So you see, the issue in America has been this. Now, more than 30 years ago, the U.S. Congress passed a bill that stopped drilling in very volatile areas in America because of the risk of what happened in Louisiana when there was oil spill by the British Petroleum, right, and Pan Ocean. Now, for more than 30 years, America had a diplomatic pact with Saudi Arabia where U.S. gets oil at a discount in turn for security for the Republic of Saudi Arabia in the Straits of Hormuz, right, and around the Red Sea. So now you have a U.S. president who has seen the risk of America depending on the Middle East for crude oil, considering the crisis between the Middle East and America. He has seen that the only way on the long term to protect the security of America is to ensure that America is energy independent. So he was very focused on investing in fracking, which is a system of drilling, a sophisticated system of drilling that is not seismic and that drills to very, very deep layers of offshore, right? Which has been successful. The fracking investments worked, and you can see that he's gradually changed America's energy policy from that of importing oil from the Middle East to currently America is now the third largest exporter of crude oil globally.
Wow.
Right?
Whole dynamics has changed. Let's look at the Sub-Saharan market, and of course Nigeria is in Sub-Saharan, so those two are Sub-Saharan Nigeria. How's the FX market?
Well, to be honest with you, the FX markets in Nigeria is in a storm right now, and it's typical to what you can call a crisis. It's in a crisis because in the black markets, just a couple of days ago, or yesterday, the dollar was trading to the Naira at 187.
That's the highest in many
which is the highest it's reached. It's never reached that level before.
Yes, yeah.
And from all indications, it's likely that in the next 30 days, Naira might fall further down to about 200. because you have several factors playing. You have the government taking up the stability fund from National Sovereign Investment Authority.
The $1 billion
to shock
as a buffer.
Exactly, as a buffer for the drop below the benchmark that was set by the federal government. You have a situation where the federal government has gone below its budget benchmark and has to create a supplementary budget to meet up with its budget responsibilities. You have an austerity measures. You have a situation where there is a supply glut in crude oil, and the OPEC has clearly stated that it's not going to compromise its long-term strategy over a short-term problem of price, which happened more than 10 years ago and went in the favor of OPEC, right? It's a good decision strategically on the long term, but in terms of on the short term, how it favors Nigeria is a terrible decision. It's a terrible decision because it doesn't favor Nigeria. But you can't use Nigeria as a tool to make long-term decisions for OPEC, because OPEC is not a Nigerian organization alone. So,
though he has a Nigerian president now.
Though he has a Nigerian president now, right, which will resume office in January. Yeah. But you see, when you look at the dollar situation in Nigeria, you see several factors playing in. Election spending, also a very important point that people are not mentioning, and the point that a lot of politicians have finished their term. And this, I'm sorry, is a period for money laundering. It's a period for them to take money out of Nigeria. So you have a lot of demand for US dollar, for euro, and for the pounds to launder out of the country.
Nigeria, in essence, is like the country's economy has been dollarized now.
Exactly. It's been dollarized. In fact, I can tell you that the dollar is more popular than the naira right now because people prefer the dollar to the naira. So you can imagine an economy where the dollar cannot be placed as a legal tender, but the foreign currency is more preferred to the local currency.
So what should have been the monetary policy approach at this point?
Well, to be honest with you, there are several approaches that the CBN can take to curb the situation. Number one, it requires huge political will and a risk in terms of political will for the government. Number one, the CBN has to be totally independent from the federal government. The CBN cannot take orders from a political party. It cannot take orders from the incumbent president. Number two, the CBN needs to ensure that the black market is regulated.
But the BDC, the regulation, it didn't it, to some extent, help to bring some direction to the operation of the para market?
You see, it's one thing for you to create regulatory policies. It's another thing for you to follow through on the policies. Nigeria's problem has not been an issue of having regulatory policies. It has been an issue of following on the policies. So, for example, you place a cap on the amount of dollars that the Bureau de Change can order for from the CBN. But is it really followed through on? No. Now, in situations like this, a good solution, like it's done in Europe, like it's done in America, is to set up a forwards market. A forwards market, and this was an issue that I exchanged with one of the directors at the CBN recently. A forwards market where people can hedge the risk of currency fluctuation, where people can place a premium and lock in the price over a period of time, whether you have an LC or you don't have an LC, whether you have a company or you don't have a company. So you have a situation where PTA used to work, BTA used to work, and then the CBN stops PTA and BTA for people. So everybody who wants to travel out or do anything that concerns ordering foreign currency has to go to the black market. You cannot run a proper and an efficient exchange rate system with a black market that is more lucrative than the official market. In Nigeria, the black markets are more lucrative than the official market. So you have a situation where there is a lot of round tripping, where people take money from the official rates and launder it to the black market, thereby making wide margins for themselves. And these are people who are close to the halls of power. So for you to solve the problem with the exchange fluctuations in Nigeria, you need a lot of political will to be able to go against the interest of people who are close to power. That's the way to solve it. Nigeria knows what to do, but the problem is the will to follow through on what they know how to do.
So in summary, the FX market in Nigeria is still not there yet. It's still trying.
The FX markets in Nigeria has the right structure. The problem is having the political will to follow on the structures that has been set. You need political will. You need political will to follow through on the rule of law. The rule of law that if the CBN places a cap of $15,000 for a bureau de change to order for dollar for once for the 2 times the order for dollar per week, right, at the wholesale Dutch auction system, right? Yes. That the CBN actually follows through on giving that bureau de change only $15,000. That one person cannot own 10 bureau de change at the same time.
Is that happening?
It's a reality in Nigeria.
That is very unbelievable. But let's come to your organization and the issue of trading, because there's this perception that because the FX market, a lot of people don't understand it, some people get into it and their fingers get burnt and all that. So tell us about your organization and tradings generally.
Well, you see, this is a very, very important topical point you've brought up, because you see the FX markets in Nigeria, the online trading markets in Nigeria is worth about $4 billion. It's traded by banks, hedge funds, private equity firms. And up until now, for the retail side of the business that trades around $150 million daily in Nigeria and has about 25,000 traders spread around the country, you see, the orientation has been wrong, because years ago you had so many people who posed as fund managers, who were amateur traders themselves, who didn't know how to make money themselves, collected money from people and ran away with the money or lost the money. And it's created a negative mindset. But you see, the Forex online trading in Nigeria is a sophisticated business that requires a lot of skill and attention and capital, right? It's a business done by the banks, which is classified as treasury operations. So the market is very, very, very legal, and it's very, very lucrative to those who are sophisticated enough to make profit from it. So what we see as an organization is providing the platforms and the tools and the resources and the people who will strengthen the foreign online trading business in Nigeria from where it is right now into an industry. It's not yet recognized as an industry because it does not have the right regulatory structures that an industry needs to run. And you see, in the financial markets, money flows to where there is regulation. The size of the Johannesburg Stock Exchange is 8 times the size of the Nigerian Stock Exchange. The Johannesburg Stock Exchange is valued at $800 billion. Nigerian Stock Exchange is valued at around $170 billion. Now, the reason why more money flows to South Africa than it flows to Nigeria, even if Nigeria is currently the largest economy in Africa according to GDP, is because South Africa was named 2 years ago as the most regulated stock markets in the world. When people see regulation, and regulation that works, not just regulation on paper, regulation on compliance, on fiduciary standards, regulation on investor protection, regulation on the depth of the market, regulation on the volumes flow and the capital control rules, money flows. They trust to keep their money in the system. So until we have a good structure in place, we cannot see capital flow to the markets like we want. So what we are doing as an organization is to create a platform, the tools, the resources, and the people that will strengthen the online foreign exchange markets in Nigeria into an industry, which it is meant to be.
Finally, because I know our time is almost up now, there's a conference you're hosting in January. Just in a brief words, tell us about it and how it will help change the narrative of FX market in Nigeria.
Well, the FX Year Conference, like I just said earlier, it's a gathering and a platform where we are bringing the regulators and the private sector together to dialogue and discuss, number one, on how to set up a regulatory structure that will focus on addressing investor protection, insurance capital, compliance rules, fiduciary standards, and what have you, and also focus on how to attract volume to the market and focus on skills. So it's a melting pot for stockbrokers, hedge funds, investment bankers, professional traders new to the markets to come together and discuss. And also the government regulators to discuss, share ideas, shape the agenda, and see how we can move the online trading business in Nigeria that is currently valued at the retail side at $150 million daily and on the institutional side at $4 billion daily to become an industry. If we get it right in January and we keep it on because it's going to be an annual event, you'll see that over the course of the next 2 to 5 years, there will be a regulatory structure for the online trading business in Nigeria, and you're going to see that capital flow increase from $4 billion to as much as 20 or 30 billion US dollars. The potential is there, but it needs a platform to ride on, and it needs a lot of awareness.